analysis on really what moved the market today. Julia Lee joins us now from Bell Direct. Julia, thanks so much for joining us on this, what's a holiday Monday here in New South Wales. We did see the Australian share market really lose some of its momentum by the end of the session. What happened?
Nadine, it was a pretty interesting session on the Australian share market. I have the intraday graph behind me, and you can see that we were off to a pretty poor start, and that's because of not only the negative lead that we saw from Wall Street, with the Dow down by 0.2% and the non-farm payroll numbers coming in worse than expected, but also a negative lead in from most commodities excluding gold. We saw oil prices down lower, base metals were also mostly lower. A lot of that was a function of those non-farm payroll numbers out on Friday, which were worse than expected, so saw a run into some of the safe haven assets such as gold, the US dollar, as well as the Japanese yen. And then you can see that the market started to gain, and that was after the jobs ad numbers were out in Australia, coming in much better than expected. And then over here you can see a head and shoulders pattern, the head at the peak there and two shoulders on either side, and that's really a reversal pattern. So then we saw a reversal down to 4,604 points before some consolidation, and then another leg down in the last half hour of trade. It has to be said, though, we saw an extremely light volume day. In fact, if we have a look at the value traded on the market today, it was just $2.1 billion, so around about half of that traded on a normal Monday. But out of the stocks traded on the market today, we saw gold miners doing fairly well, and we saw gold prices doing well on Friday and during the Asian session, regaining its status as a safe haven asset. So Newcrest mining was up by 1.7%, but the banks really coming under a fair bit of pressure. We saw ANZ and National Australia Bank losing 2.2%, but Macquarie really leading those losses, down by a massive 5.2%. We saw some stocks getting an uplift from broker recommendations. JP Morgan upgraded Aristocrat Leisure to overweight, so it was one of the best performers of the day, up by 7.4%, its share price reaching almost a yearly high. We also saw Credit Suisse increase its rating on the energy sector. In fact, it raised Eastern Star Gas to outperform, so that stock was up by 4.6%. It also raised Caltex up to neutral, so Caltex receiving a lift up by 2.7%, but otherwise a pretty quiet day on the Aussie share market today.
So, of course, Julia, all the eyes now turn to the interest rate decision by the RBA tomorrow. What is the market expecting now?
Well, the market's expecting a rate rise before the end of the year, and expectations for a rate rise in October have increased after those job ad numbers out today. Now, we saw the ANZ job ad numbers, which are a leading indicator of what's happening in the underlying economy, and we saw a rise of 4.4%. It's the second consecutive month of gains in these numbers, and those two gains coming after 15 months of declines from May 2008 up to July this year. So it's great news for job seekers, but it really does show that the Australian economy is doing quite well, and that the RBA may need to raise the cash rate from the emergency setting of 3% that it has it at the moment. So we have seen an increase in the chances of a rate hike in October tomorrow. And if we have a look at the probability of a rate hike, if we have a look at the interbank cash futures, they're predicting a 48% chance that we'll see a rate hike tomorrow, and that's up from about 18% towards the end of last week. If we have a look at the Australian dollar, that's also reflected in how the Aussie dollar has traded today. So after those job ad numbers were out at 11:30, you can see that we saw another leg up for the Aussie dollar, and the Aussie dollar has been travelling around about 87.4, 87.3 US cents over the last couple of hours.
Julia, we did not hear any news from Babcock & Brown Infrastructure today, but the Financial Review reporting a possible capital raising. What's your take on that?
Well, Babcock & Brown Infrastructure is a stock that has been under a fair bit of trouble because of the amount of debt that it has. And on Friday, the shares did go into a trading halt. The market is expecting to hear an announcement about recapitalisation. And the Australian Financial Review saying today that it expects Babcock & Brown to announce an $850 million capital raising on Wednesday. Now, $600 million is expected to be through an institutional placement, and $250 million is expected to be a share placement. Now, this is part of a $1.8 billion recapitalisation plan. It looks like there may even be a cornerstone investor. So if we have a look, a $600 million cornerstone investor also expected to take a stake, as well as the sale of assets such as the Dalrymple Coal Terminal, which is expected to bring in about $300 million, is expected to flag flag the sale of some other assets as well. We have a look at Babcock & Brown Infrastructure in 2009. It has been a pretty volatile ride, and I guess the share's down by 52% in the year to date because it hasn't been able to sort out this large burden of debt that it has on its books.
Okay, Julia, thanks so much for the update. We will speak with you tomorrow.
Thanks, Nadine.